Hello traders and welcome to this price ladder analysis video. Today you are going to learn a specific trade setup that was taken on the Bund. So yeah, our key areas for today are going to be at 24s, so at 0.24s, then at 0.23s and 0.19s. And our key trade is going to be taken at 0.19. So okay, so right here, this on this price we are going to take our key trade. So yeah, what you are seeing right here, what I'm circling right here, so this is the DOM. Okay, so it's just a visualization on how the market or what the market is currently doing. Okay, so a lot of retail traders are using some candlestick charts, so something like this right here, then it's going down right here. Some people use candlestick charts, and I don't prefer something like this. Okay, if you're looking at candlestick charts for some key levels, okay, I don't mind that, I do it myself, this is good. But if you are scalping with candlestick charts, with only candlestick charts, okay, no tool like TPO, DOM, or a footprint chart, you, or at least I think you're losing money, okay, just because you don't see some insights. Like, let's say if you're looking at the candlestick charts and I'm asking you what is or what order size is at 28.20s, okay, let's say this, okay, then you're going to look at the candlestick chart and say I don't know. And why is that? Because you don't have some insights right here. If you are trading with a DOM and I'm telling you or asking you what size is being traded at 28.20s, okay, or what limit order is sitting right there, you will going to tell me, at least I hope so, 1000 and okay, you can't see that, 1018 contracts, or yeah, 18 contracts are sitting right here, okay? And this is pretty important if you're scalping, okay? So yeah, if you're using footprint charts, I don't mind that. This for those who don't know what a footprint chart is, this is just a candlestick chart with some inside prints that, or at least with some order that was already being transferred, okay? So yeah, so let's start the video. Oh, yeah, I forgot what the DOM is telling you. So this right here is the MBO data. This basically just shows you how many big contracts are sitting at each price. So for example, we have at 28s, 21s, we have 100, or a big order like 150 sitting right here in this 1021 contracts. There is a big order with 150 contracts sitting right here. So then this is the bid column right here. This basically just tells you what limit order is sitting at each price right here, and those are all buying orders. So 889 contracts are sitting at 28.14s. This is just an example. So, and what I forgot to tell you guys is I'm not using MBO data anymore, just because I find it a bit easier to read the market just with the bid and ask column. And it's not a sin if you are trading with MBO data. For beginners, it's a pretty good tool, okay? And yeah, so then right here, this is the price column. So this is just showing you each price, and the yellow box right here is the current traded price, which is at 28s 24s. Then, as I already said, this is the ask column. This is basically just telling you how many sell limit orders are sitting at each price right here. So let's say at 28s 27s they are sitting 1006 contracts. Okay, then this is the last traded volume. So this is just telling you how many contracts were being traded or being traded currently at each price. So 237 contracts were just being traded at 28s 24s. Then, and this is the volume profile. This is just a visualization of the or in general how many contracts were traded at each price. So let's say at 28.23 they're being traded 1507 contracts. So yeah, now that we have that knowledge, we are going to look at the tape. So currently you are seeing the small bulk of volume that is at 28s 24s. You are seeing that the sellers are absorbing the buyers. 2,163 contracts were being traded right here. Now it's 2,196. And yeah. So, and what I want you guys to see is that the average order is just, yeah, let's say 800 to 900 contracts, okay? And right here it's also like this, 800 to 900 contracts is just the average limit order. So, and why I'm telling you this is just because if you are seeing or if you are looking at the last traded volume, you can see that, or not right now, but you can see how many contracts are being traded right here and how strong the buyers or sellers are right now. Okay, so let's wait. We are seeing this small bulk right here at 23s and 24s. And yeah, so, and because I just noticed I wanted to tell you guys this on the beginning of the video, but I forgot. But yeah, what I want to, or at least you're seeing now this video and thinking, okay, 24s and 23s and 19s are our key levels. Okay, I have a bit of a stroke right here, but those are our key levels. Okay, and now you're not trading blindly. Okay, because you have those key levels. But for example, what I mean with blindly trading, okay, I mean something like, okay, we are trading at 28s 24s, so this is our current traded price right here, and the key level we are looking at, and this is just an example, is at 28s 70s, and this is our nearest key level. Okay, and the market is trading at 24s, and you are selling or buying this market, you are trading blindly. Okay, and yeah, because and why I'm telling you this is because a lot of beginners are thinking, okay, I'm trading the DOM now, so I can't lose money. And I'm telling you guys, you can lose money, because if you're not looking at key levels, you don't have a thesis or a bias, if you're saying it like this. So yeah, so our key level is at 2870s, and this is just an example again, guys. And let's say we are going up, and this is another example, and we are consolidating right here, okay? Let's say this is a 5-minute chart, okay? For those who really want to know it, okay? So we have this resistance right here, and the support right here. And again, guys, this could be a key level, okay? But if we are just in an uptrend, okay, and right here this is the 28-24 area, okay, and you are again just, this is just an example, buying or selling right here, you don't really have a bias, okay? If you are long right here and the order flow is telling you this, you still don't want to trade a market like that just because you don't have a key area. If you have a key area like this and we're in uptrend and we are now trading into the support, you can look at the order flow chart or at the DOM right here, and you can see if there is some buying that is absorbing the sellers or not, okay? And if not, you can try to take a short, and if the market is absorbing the sellers, you can try to long the market, okay? So basically, I want to tell you guys, trade your key areas, okay? And do not trade blindly, because if you're trading blindly, you're going to lose money, okay? And I'm going to say you are going to trade money, to lose money, okay? So yeah, and basically I was trading blindly on 24s and 23s, and yeah, so this is a bit an older recording, and yeah, so what I'm going to say to you guys now is also very important, because you can, if you're recording your trades, you can look back and at what you did and what you could do better the next trading session. So let's say tomorrow, okay? So also record your trades, okay? Take notes, guys. So I'm going to erase something so you can see it better. So currently trading 2 minutes into the session, you can see it right here. And yeah, so let's look at the tape. 240 contracts were selling into 24s. So a decent sell order, not too much, not too big. 400 contracts were being traded right here. And now look at this, guys. Where 685 contracts were selling into 24s, okay? And this is a big order. And I already told you guys, but the average limit order is 850, let's say, something like this. And you can see it right here, 700, like right here, 727 contracts, 862, 964, 1000, 960, 964, 855, 837. And on the bit you can also see it here, 793 contracts, 876, 1075, 1254, 971. So also right here, an average entry or an average limit order of 900. So yeah, so this is a pretty big order, okay? And if you are trading something like this, really look at the last traded quantity. It's really important. So I'm going to erase that. So, and again guys, look at the offer that is at 25s, okay? The market is currently trading at 24s and the offer is on 25s is 727 contracts, okay? And what I want you to notice guys is when the market goes offered at 24s, look at how much contracts were traded or is trading now and how many contracts is going to be traded at 23s when the market goes offered. Okay, so currently trading 24s. So yeah, let's wait a bit. One contract traded into 25s, and again, just wait a bit. So currently the sellers are not that strong. 160 contract traded into 25s. Okay, and as the market goes bid right here, you can see. So as the market goes bid on 25s, currently trading 848 contracts right here. So and now as the market goes bid, there are trading 779 contracts. Okay, so the sellers are pretty real. Okay, some sellers were pulling their orders, but in total the sellers are pretty strong because they're holding or at least showing that they're having some strength and trying to get the market to go down further. But yeah, so again, as the market will be going offered at 25s, look at the 24s. Okay, it was a bit too fast, but I want to say, or at least I wanted to show you this, the buyers are pulling their orders. And what this basically means is, and this is now just another example, if we are trading at 20, yeah, at 20, 20, let's say 20s, and as the market goes offered, and we have some, or at least now at 2021s, we have 1000 contracts that are sitting right here, and here we have let's say, I don't know, 100, and as the market goes offered, so those 100 contracts were being filled or they're just pulled, the 1000 contracts goes down to now, well, let's say, I don't know, 500. Okay, so as the market goes offered, the market, or at least the 1000 contracts, goes down to 500. Okay, so 500 contracts were being pulled. So yeah, we're being taken out of the market, if you're going to say it like this, or just closed before the market could fill their orders. Okay, this is basically what it means. So yeah, let's go to the trades now. So again, you can see it on the volume profile, some absorption that was happening at 23s and 24s. Okay, currently trading 5 minutes and 50, or let's say 6 minutes into the session. Our low of this session is now at 19s. And what I like to do is, or at least what I did do in the past, is I waited 5 minutes and saw how the session is going, and then I marked the low and the high of this session, and I was looking at the 5-minute chart. So, and then I was looking at the DOM and seeing how the market is interacting on the high of the session and on the low of the session. So now we are opening the next candle because we are 6 minutes in. So now this is the new candle right here. I'm going to make that a bit smaller because we are just on the beginning of this candle. So let's see how the market's interacting. Right here I tried to sell just because the market is reloading constantly, but we're not going to look at this trade because this is for another video. So let's get into the real stuff. So I'm going to erase a bit so you can see it a bit better, but currently trading at 28.19s, and let's see how the market is interacting, or how the sellers are interacting with the buyers right here. And what I want to say to you guys is, because we reloaded at 23s and 24s, this is a better trade, okay? It's a more high probability trade because we reloaded right here, so the sellers were reloading the buyers. So every time the buyers were just hitting into the offer, the market reloaded. And if you're not knowing what reloading is, I'm going to make another video for this, guys, so don't worry. So currently trading 24 contracts into 19s, and yeah, 46 contracts, a bit of reloading, but I would not be that concerned just because we reloaded at 23s and 24s. So, and if you're wanting to see this in the candlestick perspective, so this is our first 5 minutes of the session, and now the candlestick, whoops. So, and now the next candlestick looks something like this right here, okay? So now we are trading at 19s. This is our key level right here, 19s. And now we want to see how the market is reacting at this level. So currently trading 300 contracts, 474 contracts into 19s. So let's wait a bit. 500 contracts, contracts were traded right here. A bit of a trilling going on right here. And now look at this right here. So basically we have 736 contracts sitting at 20s, and 720 contracts hitting into the bid, okay? And on the bid we have 73 contracts that are sitting right here, okay? So, and if we have such a weak order that is sitting right here, you want to hit the offer, okay? And try to get into the market, sell it, okay? Your stop would be, and I'm going to make it pink, your stop would be 2 ticks above. So wait, I'm going to erase that a bit right here. So this is your entry right here, and your stop would be 2 ticks above, so right here. at 21s. So you want to be selling at 19s because we have 73 contracts sitting right here. And now we are going back to the blindly trading because we reloaded right here, and this is our key area for this small session. You can see how I'm trading into this key area. So I already know where my stop is going to be. We have a bit of a bias right here because we reloaded at 24s and 23s. So yeah, and because we have a 73 order, order that's sitting on the bid right here, and we are hitting into the bid with 720 contracts, you can sell into it. Okay. So, and because this is an old recording, so I wasn't a beginner, but I was a bit of hesitant right here. Okay, and every trader is hesitant. Okay, so sometimes it's bad to be hesitant, like in this case right here, and sometimes it's good, but most of the time or better to say, you don't want to be hesitant. Okay, if you're trading and if you're looking at your screen and managing your money or money of others, you don't want to be hesitant. Okay, just because you could lose a bit of money, and with losing I mean not because the market hits your stop, it's because you're potentially avoiding a trade that could make you a ton of money. So yeah, don't be hesitant, guys. Note that. So, and somehow I get my fill. I tried to sell them into 19s right here. And right here, okay. So we had 700 contracts that were sitting at 20s, and it got down to 528. So 200 contracts were being pulled, but I wasn't that concerned just because I know that this is a key area. I already know where my stop is going to be, and because it's 200 contracts and 150 free contracts were just sitting right here, I'm not too concerned because 500 is more than 153, as you already know. At least I hope so. So yeah, a bit of reloading and 257 contracts were hitting into the bid. And now notice 537 contracts were being absorbed at 19s. So now you try to, or at least I tried to take another contract, or at least I tried to get into the market with a second contract. 789 contracts were being traded right here. 800 contracts and they were being absorbed. So this is good. So now I have two contracts that are sitting at 19s. And now, because I didn't talk about the target yet, now you want to look how the market is interacting. Okay, this is just pure order flow. Okay, you in this trade right here, or at least at this setup, you don't just want to look for one tick and more of a, I don't know, let's say maybe then target the next key area, or try to take a bit of contracts out of the market if you're seeing a bigger order. But now, or at least I don't know what my target was on this trade right here, but we are going to see it right here. So, and notice again, guys, as the market goes offered at 18s, they were 700 contracts sitting at 17s, and it got pulled to 110 contracts. Okay, so this is a pretty good indication that the market could go down further, and eventually it did. So now 600 contracts sitting right here. Let's see how the sellers are interacting with this contract, or at least how the bid is interacting with the sellers. Again, some pulling right here. So there is a bit of a spoof that's going on right here, just because as you, or at least I'll show it to you again. So because the sellers don't need a lot of contracts to get to 16s and 15s. So 600 contracts sitting right here, 300 contracts that were selling into it. Again, there were just, I don't know how many contracts. Yeah, but you can see it also on the volume profile, 600 contracts that were being needed to offer at 16s, then 155 contracts needed to offer at 17s. So the buyers are very weak, okay? So for now, you just want to hold your trade, okay? 11 contracts traded into it. And you can see it on the volume profile, how the market is interacting. Okay, market gone bid very quickly right here. Okay, 300 contracts needed to offer right here. 444 contracts needed to go to offer right here. So right now you just want to hold and see how the market is interacting. Now you can see a bit of size coming in. So it went bid and reloaded 453 contracts. So now you want to try and get out of this trade, or at least take one contract out. Okay, so some reloading going on. The sellers are getting weak because you can see it right here, 376 contracts, and the average, as I already said, is something like 850. So now you want to try and get out of this position. And yeah, you can see it on the volume profile right here. 2,528 contracts were being absorbed at 13. So there is a big seller that is sitting right here. A big buyer, I mean. And now you can see the market went up again. So 13s was the low of the session then. But you can see it right here. 2,533 contracts were being absorbed. So if you are still in your position at 19s, you want to get out of this. Okay. And yeah, so basically this was the whole concept. And yeah, if you like this video, please don't forget to subscribe and comment what you're wanting to see next. And yeah, trade well.